Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we'll help you understand all the latest news on the day straight, starting from the benchmark index moves to sectoral indices and the stocks that are buzzing the most in trade, and also what are experts really requesting and asking investors to really focus on in this current very volatile kind of market. Do you still have opportunities to make a lot of money in equities? That's what we will find out in today's discussion. But first up, a quick check on how the markets are doing at this point in time. Look at the Nifty. It's up by 0.6%. A very sharp move on the upside today, 17,512, the current level. So the Nifty has crossed over that hurdle of 17,500. What remains to be seen is that whether the markets shut shop with that level as well. The Sensex also hovering at 59,524, up by 420 odd points. Again, a 0.7% move on the upside. What's really helping the markets in this momentum? Is it the broader markets? Yes, the small cap 100 index is up by 0.6%. Moving in tandem with the benchmark indices. The mid-cap 100 index, however, is absolutely flat in trade, not really participating that much, although it's moved up to the high point of the day, but it's flattish with a negative bias at this point in time. Which are the sectors that are supporting the indices today? Look at the Nifty IT sector. That's also moved up higher at almost 1% uptick at the day's high level today. Remember, the IT sector is going to be in focus because next week is when we will see the Q4 earnings season kick starting with TCS and all the other heavyweights really reporting their numbers. The banking space is also moving higher by about quarter-odd%. When we look at some of the constituents of the Nifty Bank, you will be able to see that even the PSU banks and the private banks are participating. The FMCG stocks doing well today, about 0.6% up in trade. So that's the index that you need to again watch out for again. Apart from this, if you also see some of the other look at the auto space. That's the one that is in fact moving in the slower lane today. Remember, we've been seeing constant numbers coming out for the month of March as well. And after the FADA reports of the sales that we have got, we've seen some kind of subdued momentum on the auto space today. So the Nifty auto space is slightly lower in trade. The Nifty gainers, however, include a whole host of banking and financial names right there. So on your screens, 0.25% down. So the auto names are not participating in the kind of move that we've seen today. The Nifty gainers, for example, L&T, top of the charts, about 3% up in trade. Very strong order flow coming in to support the index, the stock move on the upside today. HDFC Twins moving higher, 2.5% uptick for the HDFC and HDFC Bank counter. ITC about 1.5% up. TCS is shining bright ahead of its earnings. HDFC Life also. So all three HDFC names really supporting as far as the top gainers are concerned. What's not doing too well, like I pointed out, some of the auto names. Eicher Motors down by 2.2%. Apollo Hospitals dragging a bit. IndusInd Bank not really participating in the overall banking names. When we talk about the Adani Group stocks, they are also almost flat, with Adani Enterprises by 0.8% lower. NTPC and SBI, the other names that are slightly lower in trade today. But let's welcome our guest on the show. Mr. Kranthi Bathini joins in. He's the Director Research of Equities at WealthMills Securities. Welcome, Mr. Bathini, and thank you so much for taking the time out for this discussion. First up, your take on the markets and how are you looking at some of the momentum that's built up right at the beginning of FY24, although this first week is a truncated one.
Yes, actually, market is showing some kind of resilience, and what we are witnessing is the FII selling has came down, whereas the DIS activity is went up. That's why we could able to pass on to the level of crucial level of 17,000, and now we are heading towards 17,500 levels. And what we can see is market could able to find some strength at 16,800 levels. That is a crucial thing for the markets, for the overall sentiment of the market. And uh, last fortnight has been some kind of negative news that has been keeping the extra pressure on the market due to the Fed stance on the inflation, and also the continuous news flows that was hitting the market on a negative side of the US banking crisis that has been hampering the sentiment of the market in the medium term. But what we can see is uh, there is a resilience in the economy as more than people have expected. But the question is, uh, how long this is going to last? That's the crucial thing. One is look forward. Coming back to India, we have three crucial factors market is looking forward. One is the RBI monetary policy, and commentary from RBI and its stance on inflation is extremely crucial. And second thing, as you rightly mentioned, we are entering into the earnings season, Q4 earnings season, and Q4 earnings season is extremely essential for the direction of the market. And as you aware that always stocks are slaves to the earnings. So market is looking forward for the earnings of Q4 and the monsoon. So these are the crucial factors that are going to determine the movement of the market going ahead, and it gives the clarity for the direction of the market. On top of that, we have the global cues. So these are the four key parameters one should look forward as we are entering into the new earning season and new financial year.
Right. Since you point out about the earnings season, and IT sector is going to be the first sector which will be in focus because of the earnings going forward. Now we do remember that 2022, the calendar year, was not very well for the IT sector. The beginning of this year has also been quite tepid as far as the IT sector is concerned. And again, it's been looking at some of the other roadblocks that are coming one after the other. The latest one being the banking crisis that again was being seen as a big overhang on the revenues and the margins for at least the BFSI sector of some of these IT companies. Now what remains to be seen is whether we will see some impact coming in Q4 itself when we talk about the IT space. What's your own outlook on the IT sector as far as the earnings for Q4 go, and how would you really advise investors to really approach these IT names ahead of their numbers now?
Sakshi, see, as I mentioned, okay, the economy is quite resilient than the people thought. So it is completely premature to say whether the companies are reducing their budgets or not. So we need to wait and watch for another quarter to get a clarity with respect to the IT earnings are concerned. So investors, how to approach these stocks in a staggered manner at dips. Definitely for a longer term investors, IT one can go long on IT stocks, especially the large cap IT names are concerned. One can do a staggered way. Whenever there is a weakness in the market, they can continue accumulating these stocks in their portfolio. Whereas for mid and small cap IT stocks are concerned, one need to wait and careful right now to get, because these stocks have rallied a lot in last 18 months. So one need to have a little bit cautious with respect to the mid and small cap IT stocks are concerned. But with respect to the large cap stocks are concerned, one can do a cherry picking activity, and they can, in a staggered manner, they can accumulate in their portfolio. It's a completely contrarian view, but always in long term contrarian views pays to the investors.
Right. Would you also have any pecking order in which you would approach some of these large cap names from the IT back?
Definitely, Sakshi, one can look at stocks like TCS, Infosys. These are the two stocks one can accumulate at every dip.
All right, TCS and Infosys, the picks from the IT pack ahead of earnings in case you want to invest in a staggered fashion for long term. These are the two names that you could look at adding ahead of the numbers as well. Although BSE IT index, we've seen that it slipped in its worst fall since 2008 crisis in FY23. What remains to be seen is whether Q4 and the earnings right there have anything in them to indicate a reversal of this trend going forward in this financial year as well. So that's how the IT space will be in focus, and we'll continue to keep an eye out on how these numbers really pan out and the way experts are really looking at this sector and the commentaries right there as well. But apart from that, there is another very important news flow that has come in, and that's on the overall markets as well. We've seen that global brokerage house Goldman Sachs has believed that Nifty may scale 20,000 level or mark in the next 12 months, and it is overweight on banks as well. What it has said is that on the back of double-digit earnings growth in FY24, they believe that Nifty can scale 20,000 mark. The global investment bankers target suggests a nearly 15% upside from the current levels as well, and this could perhaps augur well for all the investors who've been so far nervous about the kind of trajectory that the markets are going to take in this financial year. Goldman Sachs has further recommended buying Indian equities, saying that it is the time to accumulate quality stocks which are trading at reasonable price points as well. So although they believe that the valuations of the stocks is reasonable, though still is not cheap, the relative premium to the region has halved from a record peak, and the returns would be driven by the earnings growth as well going forward from here, and the returns will likely be backloaded as well. I wanted your take on the report findings of Goldman Sachs as well, Mr. Bathini. And do you also believe that despite all the macroeconomic uncertainties that the markets are looking at one after the other, Nifty still has in it to climb 20,000 mark in this financial year?
Definitely, it's actually looking forward for the stability in the global markets. Once there is a stability in the global market, and if the recession worries of US, uh, if ruled out, definitely we can look forward for Nifty at 20,000 levels. But we are quite resilient with respect to our economy also concerned, because look at the tax collections of India. The GST tax collections have been continuously going up. So it shows the underlying strength in the economy, and the still we are one of the strongest, fastest growing economy in the world, despite of the hue and cry what we come across in the global markets. So going ahead, our companies' earnings are extremely crucial, and how the monetary policy stance of RBI is extremely crucial to see the 20,000 marks of Nifty. But in next 12 months, it can be possible with given the underlying strength in the economy is concerned.
Okay, understood that. And Goldman Sachs has also said that they are overweight on banks. What is your own view on the way banks in the financial services sectors may actually pan out in this financial year?
Sakshi, see, banks are always pursued as the epicenter of the economy. When there is a underlying strength has to emerge in the economy, banks has to participate. Since the Indian banking system is quite strong, and also the NPA worries have been ruled out, and there is a lot of cleaning up bank book exercise has been done in India. So one can look forward for the large cap banks. Even in fact, the high risk appetite investors also can look forward for the mid-sized bank names in India. So to be stock specific, one can look for the large cap private sector banks like HDFC and ICICI banks of the world. Also, investors can look at Axis Bank also. Coming to the mid and small cap, depends upon their risk appetite. They can cherry pick the stocks in their portfolio.
Okay, understood that. When we're talking about banks and financial services space, we've seen some of the large cap names from the financial services pack, especially the Bajaj twins and Bajaj Finance, for example, has really shot up today in trade about 4% odd. The stock has been trading at, and the shares are rising after over 20% loan volume growth that they have seen, and also after global brokerage reports of, say, CLSA upgrading the stock with an outperform rating and believing that the stock can continue to give sharp returns to investors going forward as well. Bajaj Finance, Bajaj Finserv, right now Bajaj Finance is up by 1% odd. It's trading at 57.75. What's your own take, Mr. Bathini, on these Bajaj twins? We've seen that these stocks have created massive wealth for investors over the past many years, but there are also times when we see, because of the premium valuations they trade at, there are very low entry points for investors to really tap into the kind of potential that they may have in future. And also at times one feels stuck because then they do not have sudden moves at some times as well. So short term traders remain away from such stocks as well, because A, they are expensive, and they may actually have less moat to really give sharp returns in a short term. Your own sense on the top Bajaj twins?
Yes, actually, last 10 years, Bajaj Twins and Bajaj stocks have been outperformance in the market, especially the financial services of business concern. But my take on these stocks valuations are a little bit stretched, but these are the strong business models and formidable reach in India in terms of their business reach is concerned. So uh, at dips, some kind of negative news whenever the market hits, longer term investors can accumulate these stocks for a long term basis. But the entry points, as you rightly mentioned, is crucial for these stocks to create any extra alpha in the Bajaj Finserv and Bajaj Finance names are concerned. So entry levels are extremely important. And going ahead, as we are in the high interest rate regime, if the interest rates in India going to go up, then there will definitely a negative impact on the business of NBFC is concerned. But if this is the peak of the interest rates, if we get the clarity, then there is a very good amount of headroom with respect to Bajaj FinServ is concerned. So one need to wait and watch how the stance on RBI on interest rates is concerned, because the NBFC business, the margins are net interest rate margins are hitting because of the high interest rate regime. So one need to wait and watch. There is no hurry to go and jump to buy these stocks. At dips, one can accumulate uh, in the coming days.
All right. Well, thank you so much, Mr. Bathini, for being with us on this show and discussing with us all these insights about the market outlook going forward from here. A lot of factors that investors need to keep in mind. Of course, triggers immediately would be the RBI's Monetary Policy Committee's outlook on the policy going forward, and that will be out tomorrow morning, and we will get to know whether the RBI really is still on course to move the interest rates higher, or is there any indication of a pause right there. And then we will see how the markets really look at the decisions on that front, and the macroeconomic outlook from the RBI will be important to track, and then therefore the IT sector and the other sectors that will be following to come up with the earnings season as well. Immediate triggers for the markets, and we'll keep on tracking all of that for you. And so for that, you should also stick with us on Business Today TV. Don't forget to subscribe to this platform, and also continue to engage with us on our other social media platforms like Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in.
When we're covering technology on Tech Today and on Business Today, we often talk about so many cool apps, especially in the streaming space, also in the payment space. UPI is the